Coming up today, markets brace for the election, all the latest moves, what the polls are expecting, why consumers are anxious, will the Fed cut rates on Thursday, Palantir surges higher, and everything else that's happening in this massive week on Wall Street. We're going to have a good one, guys. Let's go. And welcome back, everybody, to the daily market review on potentially the biggest week of the year across financial markets. Obviously, we've got the US presidential election tomorrow, in which most states will finish their counting around 7 p.m. It'll go on into the night. The Federal Reserve meets on Thursday for their interest rate decision as well. That'll be interesting. We've also got China holding a big meeting, potential big stimulus coming out from them. Going into it today, markets trading pretty flat here on low volatility, as option dealers had been expecting first few days of this week. Just looking at the VIX one-day index tomorrow, 14.4, expecting another quiet day tomorrow. Market coiling up. Going into Tuesday night and Wednesday open is when we could see the fireworks. Looking at the VIX 9-day, tracking up again here today, 25.6. Quite a big gap over the VIX 30-day. Option dealers are expecting some movement come Wednesday morning. We also had the Trump trade pulling back this last week, notably Bitcoin, now down to a 67 handle. And Trump's own stock, DJT, had been pulling back this last week. Actually traded up a little bit higher today, up 12%. And I know this is a contrarian view against what the polls are telling us, but I continue to believe that Trump will win in a landslide victory. It'll get more electoral votes than what he did over Hillary Clinton in 2016, 304. I think he'll also win the popular vote and maybe flip a traditional blue state or two and win most, if not all, of the swing states. And the market will be up big on Wednesday, led by the Trump trade, the Russell 2000, regional banks, Bitcoin, and obviously his own stock as well, for which it appears we're getting some heavy bets on. Stock closed at $34 today. We're getting some massive blocks coming through. Out of the money call options at a 60 strike expiring later this month. Someone betting millions of dollars DJT is going to trade significantly higher over the coming weeks. And that would take out that high from the 29th of October if we did trade up to $60 a share. But certainly getting a lot of action. 115 million shares there traded today. Also another notable news out over the weekend, we've got Nvidia replacing Intel in the Dow Jones Industrial Index. Interesting to note, Nvidia replaced Enron in S&P 500 in 2001. And once again today, Nvidia's market cap overtook Apple for briefly reversing back into the close. We also just got earnings out from Palantir, ripping up after hours as I speak, up over 12%, as they reported revenue growth of 30% year over year, US revenue growth 44%, and they raised their full year guidance. Really good result. And as a lot of you guys know, I've been a Palantir bull all year. In fact, it was my first stock pick, my stock pick service back in mid-June. I picked it up just over $23 a share, and at $46, now trading up to a new yearly high. This has already turned into a double for me. And just goes to show that the AI boom is well and truly alive, and this is a very important stock. Governments and big companies all around the world really integrating their platforms into their businesses, which kind of locks them in forever, really. Becomes kind of mission critical infrastructure in their business, really high switching costs, high barrier to entry from competition, and for sure the stock is not cheap, but very high quality stocks really are. You might have also heard news over the weekend, Warren Buffett continuing to sell Apple shares. He's really selling out of this stock. Sold over 2/3 of his initial position over the last year and has now got over $300 billion in cash, short-term T-bills. There's wild speculation as to what that implies. The consensus being Buffett forecasts a crash, or he can't see anything cheap. He doesn't like Apple, maybe the China risk. I think he could potentially be building up ammo for a monster acquisition, maybe 150, 200 billion, as I doubt he'll keep over 320 billion in short-term T-bills if rates keep coming down like they're expected to this Thursday and into next year. Those T-bills start yielding 3%. We just have even a little 10, 20% correction in the market. He may be able just to fire off that elephant gun he's got locked and loaded. However, just getting back to the biggest story for the here and now, US presidential election, we had seen a real bump up in Harris's odds of winning this last week. With the pullback in Trump's odds, along with the Trump trade, still got the US dollar and yields sitting pretty though. I think it may have actually been some hedging going on with Harris. Like I told you guys last week, when her odds were about 34, 35%, along with the market dipping, was setting up a pretty good pairs trade. And so we've still got plenty of media and polls out there showing Harris as going to be the likely winner. In fact, just looking at this website here, which collates all types of national polls. In fact, looks at an average of 25 polls. They've got Harris out in front, 48.4% versus Trump, 47.2%. So the mainstream media and all these polls are expecting Harris to win. Prediction betting markets have still got Trump out in front, and he's actually just bounced back over the weekend, now out in front, 58% to Harris, 41%. And so as usual, I'm following the money, and like I already told you guys, I expect Trump to easily win, and the market should trade up significantly higher on Wednesday. The biggest risk is if the states can't declare a winner on Tuesday night, which very well could happen, then we're going to see a lot of volatility in the market. As markets hate uncertainty, we may not get the result until Wednesday or Thursday. I'm hoping we know by about 1 a.m. or 2 a.m. New York time come Wednesday morning. But if we still don't know the result come Wednesday market open, then of course we're going to see quite a lot of volatility across the board. However, I'm optimistic and hold faith that we're going to see a clean election this year, unlike 2020, as Trump's team has deployed 230,000 poll monitors and 500 attorneys across all battleground states to monitor their election and encourage fair play. However, a lot of people are anxious, including consumers and corporate America. There is quite a lot at stake in this election, knock-on effects all around the world. Foreign policy a big one, and that's been mentioned by CEOs across the board as well. And in a change of tune this year, many have actually broken away from tradition and taken the risk and come out in support of Trump. Some of the biggest companies in the world, BlackRock, Citadel, and many others in the financial sector. Jamie Dimon just said last week it's time to fight back against regulators. Just looking at earnings coming through today, once again, mostly green across the board. Will be interesting to hear Jay Powell's tone if Trump does win this coming Thursday. I think it might be too obvious for him to start turning hawkish right away. He'll probably just walk the line, play it neutral, and if he's going to get hawkish, that may come next month or January. But we've got JP Morgan saying Trump win could actually prompt the Fed to hit pause on its rate cutting cycle, as he may start talking about tariffs and how they could potentially increase inflation. We shouldn't be too surprised to hear that. And that's why plenty on Wall Street are getting skeptical on the Fed's easing path. Not just the Trump win, but the strong economic data we've been getting, jobs report holding up, markets repricing of bond yields, inflation expectations, as more and more people say he didn't need to cut 50 basis points, starting to look like a mistake almost. And like I said back then, I believe he was walked into it by not only the market, but immense political pressure. For those of you who don't know, Federal Reserve is supposed to be independent from influence, make its own decisions. However, we're getting reports once again, US Senator Elizabeth Warren is urging the Fed to cut another 50 basis points after she sent a letter to Jay Powell last time demanding him cut 75 basis points. Keep in mind, Elizabeth Warren has a net worth in excess of $60 million herself. She is part of the 1%, even though she likes to hide from that fact. She's actually one of the biggest beneficiaries of lower interest rates. So if Jay Powell starts umming and ahhing on Thursday, starts talking about tariffs and inflation, changing his tune on the Fed's rate cutting path, that could definitely add more volatility to the markets. Could continue seeing yields going up, the dollar going up, and he'll have egg on his face for doing a 50 basis point cut right in front of the election, only to flip-flop right afterwards if he does. However, we are coming into it hot. The best first 10 months ever in an election year. S&P up 20%. That generally bodes well looking forward. And just generally speaking, stocks have done pretty well around elections. In fact, looking at the last 10 elections, all but 1 year, 2000 with George Bush, in which he just narrowly defeated Al Gore. Had to actually go to the Supreme Court. 9 out of the last 10 times, stocks were higher a year later by a significant margin as well. And typically over the next 3 months, stocks traditionally trade up. However, I'd say that's more to do with the bullish seasonal period of November through January. And just taking a look at valuations, S&P expanded tech forward PE 28.2, still well off the late 90s. And when you strip out tech, S&P PE is at 19, which is actually also well below the late 90s. So definitely still more room to run on the upside. However, just looking at the S&P 500, still not cheap by any measure. And what could really throw a spanner in the works is if inflation does keep coming back. Crude oil were to bounce, commodities, agricultural commodities, keep going higher. China can get back to growing their economy above 5%. And the US economy continues to hold up, along with global liquidity at all-time highs. The world's just awash with currency. I still think inflation risks remain to the upside, especially if the Fed's going to keep cutting rates, just pouring fuel on the fire here. And we'll really be waiting to see what China does if we get an election result come Wednesday morning. They're going to pull the trigger on a big fiscal stimulus package. How big are they going to go? Could be potentially looking at $1.5 trillion US dollars, which will be the bazooka. Could really set things firing off on the upside as well. And we've already got oil ticking a little higher to start the week off after we just got news OPEC extended production cuts. Saudis really want to get their peers to pull back production, as they would like the price of oil back above $80 a barrel, kind of their sweet spot. Obviously, we've still got geopolitical tensions with Israel and Iran. Doesn't look to be dying down anytime soon. And there's crude back above the 50-day, $71.60 a barrel. Helping to make the energy sector one of the best performing sectors today, along with a big reversal for ExxonMobil. Chevron's still trading up, and some of these other names I've been watching still trying to find a bottom here. Phillips 66 and Marathon Petroleum ahead of their earnings tomorrow as well. It was also unfortunate to read today some negative news coming out from the government in regards to Amazon's data center plans. That's the Federal Energy Regulatory Commission shot down Amazon's plan to use more power from a Talon Energy nuclear reactor to fuel a data center. Once again, just more red tape and regulation that hopefully a new government could do a real real number on, and which investors may be betting on as well, since Talon Energy did get the dip bought right off the open today, after it opened down significantly lower. Same deal with the uranium sector, put in a bit of a hammer candle there today. Investors may have bought the dip, hoping that a new pro-business government can unlock this industry to its full potential, along with many others, as it's really a crucial industry needed for the future growth of the economy. Market's still pricing in 98% chance the Fed will cut rates this Thursday, so it'd be a big upset if they didn't, but more importantly will be Jay Powell's tone, language, especially if Trump wins and he starts talking about tariffs and inflation again. Although, like I said, that may be a bit too obvious, and he may start talking about it in the December or January meeting. And there's a look at China as well. FXI coiling up going into the election in this week. We've got gold pulling back a little bit here. The dollar's pulled back a little bit, as have 10-year yields. Still in this well-defined short-term uptrend, but we could get some movement from bond yields this week as well. Just looking at the bond volatility index move, quite elevated there. But all things considered, the VIX 30-day at 21.9 isn't all that high given the massive events we've got on deck this week. Obviously, the VIX 9-day is a little elevated at 25, pricing in some movement. And just looking at my sector trends table indicator, we are a bit mixed across the board. Still got consumer discretionary performing really well, thanks to Amazon. And we've obviously got yields in oil and the dollar uptrending. Market's a little soft. My S&P 500 oscillator is almost back to oversold territory. But like I said, if we don't get an election winner come Wednesday market open, we could see some volatility. And if the polls were right and somehow Harris did win, I think we could get a big sell-off and repricing in the markets, the dollar, yields, all the Trump trades. And like I said, we'll have to cross that bridge when we get there. But my forecast is that's not going to happen. I think Trump will comfortably win. I think Americans have had it with inflation. They've had it with illegal immigrants. They've had it with these forever walls. They didn't even vote in the current Democratic leader. Last time she was in a primary, she was polling at 4%. She had to pull out. And that's why my gut feeling is he is going to win, although it may take a day or two with some volatility. Then once it's all cleared, we should get a big rip higher, especially in small caps, American industrials, Bitcoin, regional banks, and oil and gas stocks as well could catch a bid. Otherwise, tomorrow the market is expected to coil up again as we go into the election tomorrow night. And I'll be making another video just as we're getting the election results coming in. And I guess we'll just have to wait and see to how the cookie crumbles. That's all for today, folks. Thanks very much for sticking with Click Capital, and I'll see you again tomorrow night. Cheers.